Losing a spouse can bring emotional and financial challenges. And today, Mary from Columbia, South Carolina said, "Hey, Hobart, I'm 68 and I recently lost my husband. Now, I've heard this can change my tax situation, but I'm not sure what to expect. How does losing a spouse affect taxes in retirement? And is there anything I can do to minimize the impact?" Oh, Mary, first, I'm sorry for your loss. You're right. Losing a spouse can have a significant impact on your tax situation. And it is important to understand the changes so you are able to plan accordingly. When you lose a spouse, your tax filing status is going to change from married filing jointly to single, or in some cases, you may qualify as a surviving spouse for a short period. Now, this shift can result in a few key changes. First, higher tax bracket. As a single filer, you're likely going to move into a higher tax bracket at lower income levels compared to when you were filing jointly. This means you could end up paying more in taxes, even if your income stays the same. There's also the reduction in the standard deduction. For 2024, the standard deduction for married couples filing jointly is double that of a single filer. After the year of your spouse's passing, you'll lose the higher deduction, which could increase your taxable income. Also, Social Security taxes. If you were both receiving Social Security, your household income might have been enough to trigger taxes on up to 85% of your benefits. After losing a spouse, if your income drops significantly, you may end up paying less in taxes on your Social Security benefits. However, the opposite can also happen. If your total income doesn't decrease much, the higher tax bracket as a single filer might actually result in paying more taxes on your benefits. Things like required minimum distributions or RMDs. That's what you have to take out of your IRAs or 401ks once you're in your 70s. If your spouse was taking RMDs from a retirement account, those payments will stop. But if you inherit the IRA or 401k, you'll need to adjust your own RMD schedule, which also could impact your taxes. Now, you asked the important question, what can you do? First, plan those withdrawals strategically. With change in tax brackets, it might make sense to adjust the order and the timing of withdrawal that you take from retirement accounts to maximize and minimize your taxes at different times. So consider tapping into Roth accounts. Those are tax-free if you've got them. Review your filing your filing status. Depending on your situation, you may qualify for qualifying widow or widower status, which allows you to retain the married filing jointly rates for up to 2 years after your spouse passes away. Now, this can provide a bit of temporary relief from the tax hit. Also, work with a professional. When we lose somebody, this can get really complex and it can be very sensitive and it's easy to make mistakes. A financial advisor and or a tax professional can help you develop a tax efficient strategy that should work for your new financial reality. The thing is, by planning ahead and making adjustments, you can help reduce the tax burden and ensure your finances are in order moving forward. As always, thank you for watching. If you've got any questions about taxes or Social Security or anything else related to your financial journey, send them in. We'd love to answer whatever questions you may have, just like we did today with Mary's question. Now, if you found this video helpful, please subscribe and give it a thumbs up. We are here to guide you through your retirement with confidence, even during the tough times. Stay connected for more tips and advice. See you on the next one.